Did the Fed just hint at XRP use? You decide. The Federal Reserve just dropped a report. To most people, it looked like another routine update, a few pages of regulatory jargon, forecasts, and institutional policy speak. But for those of us paying attention, for the XRP community and the few digging deep behind the headlines, something about this report stood out. It was subtle, carefully worded, almost buried in the fine print. But it was there. They didn't say Ripple. They didn't say XRP. But they did mention this. Instant cross-border payments. Real-time settlement. Liquidity optimization using distributed ledger technologies. Now pause. Let that sink in. If you've spent even 2 weeks down the XRP rabbit hole, if you've looked into RippleNet, On-Demand Liquidity, or the XRP ledger, you know exactly what that sounds like. This isn't the first time institutions have hinted. But this time, it's the Federal Reserve. Not a podcast guest. Not a crypto influencer. The central bank of the most powerful economy in the world. So the question is simple, but the implications are massive. Did the Fed just subtly signal that Ripple's infrastructure, or even XRP itself, is being studied, tested, or quietly considered for future global financial rails? Or are we just reading too far between the lines? Seeing what we want to see? That's what we're diving into today. Because this isn't just another hopium-fueled XRP video. This is a full breakdown, facts, receipts, timelines, use cases, and a deep look at who's building the financial system of the future. And why Ripple might already be inside the machine. The channel that takes you past the noise, beyond the memes, and straight into the core of crypto's most explosive narratives. If you're part of the XRP army, or even just XRP curious, if you care about macro shifts, institutional adoption, or where the money is really going in this next cycle, then smash that like button, hit subscribe, and grab a drink. Because today, we're going deeper than we've ever gone. Let's dig in. Let's start with what might be the smoking gun. The Federal Reserve released its latest financial stability report, a document meant to highlight emerging risks, trends, and shifts in the global financial landscape. Buried in that report was this line: there is growing interest in the development of real-time cross-border settlement systems utilizing distributed ledger technologies, which aim to reduce friction in liquidity management and improve operational efficiency across financial institutions globally. Let's slow that down. Real-time settlement, liquidity optimization, distributed ledger technology, DLT. If you've been tracking Ripple for any amount of time, you already know. That isn't just financial jargon. That's Ripple's entire business model, almost word for word. No, the Fed didn't say Ripple. They didn't say XRP. But here's the question. Who's actually building this right now? IBM? Not anymore. They quietly shuttered their enterprise blockchain division back in 2022. JP Morgan? Sure, but they're building closed, permission systems for internal use. Great for their clients, not for the world. Now let's talk Ripple Labs. RippleNet and On-Demand Liquidity, powered by XRP, are already live. They're already settling payments between countries like Japan and the Philippines, between Mexico and the US, between Europe and Asia. This isn't vaporware. This isn't theory. This is happening right now. So you have to ask, why would the Federal Reserve suddenly start talking about real-time global settlement using DLT? Is it just a coincidence? A vague reference with no intent? Or is it a carefully worded signal, an acknowledgement of the very rails Ripple's been building for over a decade? The kind of infrastructure a future US digital dollar might plug into without ever naming names? You decide. Because whether it's deliberate or not, the message is clear. The old system is creaking. And the new one? It's already coming online. What Ripple has built. Narrator. To understand the implications of what the Fed said, you need to understand what Ripple is actually doing. Let's break it down. Ripple's core innovation isn't just the XRP coin. It's the network behind it, RippleNet. RippleNet is like Swift 2.0, but better. Instead of taking 3 to 5 business days to move money across borders, RippleNet offers instant settlement. Here's how. Banks or money transfer companies integrate Ripple's software. When they want to send money internationally, they tap into XRP as a bridge asset. Let's say a US company wants to send $1 million to a supplier in Thailand. They convert USD into XRP, send it over the XRP ledger, recipient converts it to Thai baht. Total time, seconds. Total fees, a fraction of a cent. No pre-funded accounts. No middlemen. No currency risk sitting in nostro vostro accounts. This is the On-Demand Liquidity System, or ODL. And as of now, it's being used by institutions like Triangle, RippleNet, Bhavati, Santander, and dozens more. Not theories. Not pilots. Live rails. So when the Fed says, improved settlement using DLT for cross-border liquidity management, they're describing Ripple's product, whether they realize it or not. Let's zoom out. Because Ripple isn't just some plucky startup out of Silicon Valley trying to disrupt finance with buzzwords and blockchains. They've never played that game. From the very beginning, Ripple took a different approach, one that most crypto projects still don't understand. Instead of attacking the system, they integrated with it. Instead of fighting regulators, they sat across the table. While other projects were minting dog coins and preaching decentralization from anonymous Twitter accounts, Ripple was walking into boardrooms, real ones, with real institutions. Banks, payment giants, governments, and now, central banks. Their footprint? Global. Let's take a tour. First stop, Japan. Ripple's partnership with SBI Holdings isn't just a business deal, it's an alliance. SBI is one of Japan's financial powerhouses. Over $4 billion in annual revenue, with deep influence in banking, brokerage, and fintech. Together, Ripple and SBI launched SBI Ripple Asia, creating one of the first real-time remittance corridors powered by blockchain. They're not just testing use cases, they're moving money every single day. From Japan to the Philippines. From Japan to Thailand. Live volume, not sandbox simulations. Next, the Middle East. A region where oil wealth meets futuristic ambition, and Ripple is right in the middle of it. In the UAE and Bahrain, Ripple's On-Demand Liquidity, ODL, is already up and running. Banks and remittance firms are using XRP as a bridge asset to settle cross-border transactions in seconds, without needing to pre-fund accounts in foreign currencies. That's not just innovative, that's game-changing. Because in traditional finance, pre-funding is a massive capital sink. Billions sit idle, frozen in nostro vostro accounts across the world just to keep the gears turning. Ripple replaces that with a single token, XRP. Instant liquidity. No pre-funding. Lower fees. Higher speed. Now shift west, to Europe. In Spain, Santander, one of the largest banks on the continent, has collaborated with Ripple to enhance international money transfers. And they're not alone. In Sweden, Ripple partners are plugging into fintech pipelines to service Nordic remittance routes. In the UK, licensed payment institutions are using Ripple's rails to power frictionless transfers for businesses and high-volume corridors across Europe. This isn't future tense. This is happening now. Let's go south, to Africa. A continent rich in resources, talent, and digital potential, but still underserved by legacy financial infrastructure. Ripple's eyes are on mobile money systems, like M-Pesa in Kenya and mobile-first fintech firms in Nigeria, Ghana, and South Africa. Because Africa doesn't need to upgrade its financial systems. It's in a position to leapfrog straight into blockchain-powered liquidity, bypassing the outdated architecture the West is still clinging to. And Ripple is aiming to be that leap. So far, we've been talking about commercial players, banks, money transmitters, fintech innovators. But here's where it gets serious. Because Ripple isn't just working with companies. They're working with countries. Let's talk central banks. That's right, sovereign monetary authorities. The very institutions that define national currency policy. Most crypto projects couldn't get a meeting with a central banker. Ripple? They're designing digital currencies with them. In Bhutan, Ripple is powering the digital Ngultram, the central bank's digital currency pilot. The goal? increase financial inclusion, expand access to banking in rural areas, and modernize settlement infrastructure using the XRP ledger. In Palau, Ripple is helping launch a USD-backed stablecoin, effectively functioning as a small-scale central bank digital currency built directly on top of the XRPL. These aren't marketing stunts. These are state-level deployments of Ripple's tech. And it doesn't stop there. Ripple has publicly confirmed that it is consulting with over 20 central banks around the world, all exploring how to issue and manage their own CBDCs, central bank digital currencies, using DLT infrastructure. Let that sink in. Ripple isn't just building crypto payment apps. They're building the rails central banks might use to issue sovereign money. This puts Ripple in a category few in crypto even come close to. They're not chasing hype. They're architecting infrastructure, deep infrastructure, for a future where global value flows instantly, securely, and across borders without friction. And at the heart of it? XRP. Because Ripple's ultimate vision isn't just fast payments. It's global liquidity. Every bank, every currency, every corridor, connected through a unified bridge asset. An open, neutral settlement token. A digital Swiss Army knife for moving value. And that token is XRP. So when the Federal Reserve, in 2025, releases language about distributed ledger technology being the future of liquidity optimization, when they talk about real-time cross-border settlement without naming names, you've got to ask, who's already doing this? Who's already working with central banks? Who's already running live corridors on every continent? The answer isn't vague. It's Ripple. And no, the Fed can't say that outright. Not yet. The political fallout of favoring one private firm, one token, would be enormous. But behind the scenes? Behind closed doors? Ripple might already be the framework. Because when you've spent over a decade building trust with regulators, establishing global corridors, and proving your tech at scale, you don't need to be name-dropped. Your work speaks for itself. And as the old financial system crumbles, slow, fragmented, and bloated with friction, the institutions of tomorrow are already choosing their tools. So the next time you see DLT in a central bank's report, the next time you hear about real-time liquidity solutions or CBDC test pilots, ask yourself, who's already powering it? And how long until they say the quiet part out loud? Let's talk about something that sounds boring, but might be one of the biggest signals in the entire XRP story. ISO 20022. Now, if your eyes just glazed over, don't worry. Most people don't know what it is. But here's what matters. ISO 20022 is the new global messaging standard for financial institutions. Every major central bank, SWIFT, and high-value payment system is either transitioning to it or already has. It's not a protocol like Bitcoin. It's not a blockchain. It's the language, the structure, that financial institutions use to communicate across borders. Think of it as the standardized grammar for sending money worldwide. And guess what? There's a very small list of crypto-native technologies that are either compliant with ISO 20022 or designed to work alongside it. Ripple's XRP is one of them. Let me repeat that. XRP is one of the few digital assets positioned to be ISO 20022 compliant. This is critical. Because as financial institutions upgrade their messaging systems to ISO 20022, a process involving trillions of dollars in global money flows, the tokens and technologies able to plug in seamlessly will have a massive advantage. That doesn't mean the Fed is using XRP. But it does mean XRP is compatible with the future financial plumbing the Fed and its international partners are already installing. And when you're building the financial internet of value, compatibility is everything. Ripple didn't just think ahead, they aligned with the biggest shift in global finance infrastructure we've seen in decades. So again, when institutions talk about building on ISO 20022, or upgrading SWIFT, or unlocking cross-border settlement using DLT, it's not unreasonable to ask, is Ripple already in the picture, just not in the headline? Because in this new world, the real signals aren't shouted. They're coded. And XRP? It might be the code that fits. So what does it all mean? Let's strip away the noise and zoom out one last time. We've got the Federal Reserve, the most powerful central bank on the planet, quietly signaling a future built on distributed ledger technology, real-time settlement, and global liquidity optimization. We've got Ripple, not just surviving but expanding, while navigating years of lawsuits, FUD, and regulatory uncertainty. Still building, still deploying, still being chosen by banks, governments, and payment networks across the globe. And we've got XRP, a digital asset that's already proven itself as a real-time bridge currency, now positioning for compatibility with ISO 20022, CBDCs, and future financial infrastructure. Here's what no one wants to say out loud. There's a chance XRP becomes the plumbing for the next financial system. Not necessarily the currency of it, but the invisible connective tissue, the neutral bridge that banks and governments use behind the scenes to move value instantly and efficiently. And if that's the case, if XRP is even part of that global architecture, then its current market cap, its current price, its current perception, all of that gets rewritten. Because we're not talking about speculative hype anymore. We're talking about utility at scale. We're talking about institutional-grade infrastructure that governments might quietly rely on while the public remains focused on headlines. Now, will the Fed ever say the words XRP in a press release? Maybe not. They don't have to. This isn't about public endorsements or ticker symbols. It's about function, compatibility, integration. And Ripple, whether you like it or not, has spent over a decade building tech that actually works. Meanwhile, the financial world is transforming. SWIFT is evolving. Central banks are racing to launch digital currencies. Liquidity is being redefined, not by who controls the money, but by who can move it fastest, cheapest, and most securely. And if you've been paying attention, Ripple is already doing that. So, did the Fed just hint at XRP? That's the question. Did they drop a subtle breadcrumb, buried in technocratic language, pointing toward a future where distributed ledgers like the XRP ledger become critical infrastructure? Or are we all just seeing what we want to see? You decide. But before you answer, remember this. Every major financial revolution in history started quietly. SWIFT was once experimental. Email was once dismissed. Bitcoin was once a white paper. And now, XRP, RippleNet, and distributed liquidity frameworks are being quietly adopted behind closed doors, while retail argues over price charts. So when the system flips, don't say no one warned you. Don't say you didn't see the signs. Because whether or not the Fed is talking about XRP specifically, the world they're describing, Ripple has already built it. Thanks for watching Crypto Wonderworld, where we cut through the noise and follow the tech, not the hype. Smash that like if you made it this far. Subscribe if you want more deep dives into the future of finance. And if you're in the XRP rabbit hole, this ride's just getting started. Stay curious. Stay sharp. And as always, don't just speculate. Investigate.